here for this episode of Akrinos Access, featuring Mr. Darren Jackson. You have come to the right place. We're gonna let the music roll for a few more minutes here, let a few more guests come on in, and then we'll hop right into it. Thank you all for joining us. Well, ladies and gentlemen, hello. My name is Eric Matei, and I'm the President and Chief Vision Officer of Akrinos, and it is a pleasure and a privilege to welcome each and every one of you tuned into this episode of Akrinos Access. For this installment, super excited to introduce a really remarkable person in our guest tonight, and that is Mr. Darren Jackson. And Darren is going to be contributing to this conversation we've been having here across the board in a variety of different environments having to do with all the excitement revolving around business financing in private practice these days. So Darren, for starters, man, thank you so much for joining us this evening. It's a pleasure to have you on.
All right. Am I unmuted?
You are good. You are golden.
Thanks, Eric.
Yes, sir.
I appreciate it. I'm glad to be here, and thank you to all the doctors that decided to listen to us talk tonight. So we really appreciate it, everyone. Hopefully this should be a good, entertaining and educational discussion tonight.
Absolutely, Darren. Absolutely. So, hey, look, without any further ado, let's go ahead and jump right into it, because I know, you and I have had a couple of meetings prior to our conversation here, and we've talked about some really exciting things going on in this world of optometry business financing. And Darren, the way I'd like to start the episode is the way we do everything, and that's just get to know you. So please share with us a bit about your background in banking and how you came to specialize in the world of optometry practice financing.
Sure. Great question, Eric. And again, thank you for allowing me the opportunity to talk tonight. So I'm Darren Jackson. I'm a vice president with Wells Fargo's Healthcare Industries Group, one of the healthcare business development officers. I'm based in Miami, Florida, and been with Wells Fargo for 6 years. Before working at Wells Fargo, I worked for Bank of America Practice Solutions for a few years, working in the optometric and medical space. At that time, I worked and lived in the Washington, D.C. market. Before doing that, I spent about 7 or 8 years working in the pharmaceutical sales industry, where I worked for companies such as Pfizer Pharmaceuticals, Merck Pharmaceuticals, and Schering-Plough Pharmaceuticals. So I've been in healthcare since 2004 when I got out of college. I went to a small state school in Maryland called Salisbury University. We are the Seagulls, which is a very unique mascot, but I rock my Seagull, Salisbury University Seagull clothes and hats down here in Miami pretty often. And again, I'm glad to be here, guys. That's my bio in a nutshell.
Love it. Absolutely love it, Darren. So that being said, look, let's jump right into it, right?
Sure.
And I suppose to kind of frame it up for our guests this evening, there were kind of 4 key areas that we've stumbled upon that I know you share with me, Darren, that you get a lot of calls about. I know we at Akrinos get a lot of calls from folks regarding these kind of 4 key areas that we're looking forward to addressing. And that's going to be cold start, right? Business financing for your cold start venture. It's going to be buy-in and buy-out. And I know some really cool insights you've got to share revolving around practice purchases and transitions. The third is this hot topic that we see constantly talked about in the online communities, and that is purchasing commercial real estate for a practice. And then last but not least, I know you said some big things going on with just refinancing your business loans to free up some cash flow. So I guess to take it from the top there, let's start with this. What all is encompassed in this world of business financing?
Yeah, it's a lot. I'm going to speak as a banker that's been doing this now for about a decade or a little bit over a decade. I've worked for 2 great organizations with Bank of America as well as with Wells Fargo. To begin, Now is a great time to be an optometrist. Now is a great time to be a healthcare provider as a whole because um, most of the banks, if not all of the banks, we want your business. We want to earn your business as an optometrist, specifically as an optometrist. We want to not just provide a loan or provide business banking services, but we want to learn more about your organizations and your businesses and learn how we can be a better fit for you and have products and services for you as an optometrist. So that's high level. Uh, with my level being a loan officer, business development officer, in the role that I'm in currently now, my job is to be an advocate on behalf of the industry to let my leaders understand that optometry is an industry that we need to stay in and fight for and provide unique services and products for. So again, high level, uh, the banks, we love optometry, we love optometrists and understanding more about your business. And we're here to provide loans and business banking services for your business.
Excellent, excellent. So on that note, let's start at the top of our list, which I know has been a again topic that you and I have discussed quite frequently. I know an area that we love to work in serving our clients, and that is cold starts. So Darren, give us a crash course to all of those viewers right now who are either in this process, actively in this process, or even if they see it on the horizon here. Let's give our viewers a crash course in this whole world of how you go from like having this idea to securing your financing for your cold start.
Yeah, I love the term crash course, Eric. It's very challenging. Being a cold start doctor is very challenging. Um, you go from having a salary, a guaranteed salary, working in a commercial space or for a private practice, to being out on your own, being the boss of your own practice, being the person that's running and starting their own dream practice. So it's very challenging being a doctor that wants to cold start a practice. But the great news is banks, we want to lend, we want to help, we want to provide our advice to the best of our ability and partner up with consulting groups such as Akrinos, where we can help provide not just the financing, but again, the consulting and the thoughts on what is best to do to get approved for your loan, as well as to get the max amount of a loan that you can qualify for. So again, cold starting, whether it was 10 years ago, 20 years ago, or right now, um, if a doctor is ready for that and ready to embark on that dream, it's always a great time to cold start a practice.
Fabulous, fabulous. So what should doctors be expecting when they're ready to embark on this journey, right? I assume they can't just go to their local branch of whatever bank and say, "Hey, I'd like to secure a $400,000 business loan," right? Walk us through a little bit of the process of how a doctor goes about securing their financing for their cold start.
Yeah, great question, Eric. So here's the thing. A doctor can go to their local branch of their local bank and secure a loan for their practice. So that's something that a lot of the small banks, regional banks, and larger banks are doing. So the great news is, doctors, there's a lot of options out there that you can go to based on your current bank, current credit union, so on and so forth. Um, some of the bigger banks out there, such as my bank and some of the other larger banks that are out there, we have specialists and folks that have been doing this for a long time, working with doctors throughout the country and or in regional regions of the country, where we work with different centers of influence. In my industry, we call it COIs, or centers of influence, such as attorneys and attorneys, lawyers, bankers. Oh, I'm sorry, I'm a banker. Sorry. CPAs, consulting groups, so on and so forth, that can help you as a doctor start your practice up with the least amount of hiccups. So the good news is, your local bank, if you walked in, they might be able to help you out. And or if you call someone like myself at Wells Fargo, I can help you out as well. In regards to the dollar amount, Eric, I've seen practices, receive cold startup loans from $200,000 up to $500,000. So that's where having that great relationship with a consulting group as well as with your banker is really important. So we can work together as a team to help you get the max amount of money that you can qualify for.
Gotcha. Okay. So it's definitely, if I'm hearing you right, it can be a range as far as what someone may qualify for. And
Yes,
obviously there are a number of different variables that play into that. Personal credit history, perhaps other assets, as well as something you mentioned. That's just like having a business plan, right? Like when you sit down with a banker to have this conversation, that you do have a business plan, that you do have some financial forecasting done, that you can effectively make the case for your business and the vision for your business that that bank would want to loan you the funds.
great point about business plans. So business plans are, in my opinion, essential to being that guide and that reference point that you as a individual cold starting doctor can use and refer to as you go along that journey of starting your dream practice. So bottom line is most of the banks are going to require a business plan, especially if you're going to go with an SBA loan, and a business plan will be required. Again, there are banks out there, doctors, that have specialized programs, such as my bank, where we'll lend to you up to 100% financing with no money down, other than a couple of fees for applications and things like that, or administrative fees. But we can lend up to 100% financing based on the fact that you're an optometrist. So there are programs out there in which you won't have to go through an SBA or Small Business Administration loan. Those loans, for many of the doctors that know and or don't know, usually require an equity injection of about 10% or greater, depending upon the bank, where you have to take money from your checking account, savings account, and inject that into your loan. With some of the banks that are out there, such as my bank at Wells Fargo, you don't have to do that. You can just sign up, apply for the practice loan for the cold start, and there'll be no money out of pocket for the specific loan in terms of equity injection.
Gotcha. So it's sounds to me like there's a lot of different ways for these loans to be written. I mean, obviously there's a lot of variables at play, but there's also a lot of ways for it to be written. So really interesting stuff. So okay, so we were talking cold start, right? Developing a relationship with a banker, having a business plan in place, other things you can do to kind of prepare yourself that this process is going to be top notch, and you're going to be able to get everything that you're applying for, right?
Absolutely.
But now let's shift gears from cold start and let's transition now into another hot area in optometry business finance, and that is buy-in buyouts, right? So that business transition, perhaps bringing in a partner, and whether our viewers here are the seller or the buyer, why don't you give us a bit of insight into how that process works?
So Eric, before I answer that question, I think it'll be a good idea for me to bring up the dream team, because I keep talking about dream and dreaming and your dream practice. So I believe the dream team, or the 4 or 5 people, maybe 7 people or so, that every cold starting doctor needs to have in their corner. And Eric, I'll be the host for a second. Who are some of these people that I'm putting you on the spot, Eric? So who are some of these people that the doctor needs to have in their corner when they're cold starting to practice? So obviously we need to have a startup consultant. That's important.
Yes. We need an attorney.
Yes, that's important.
We need a CPA.
Yes.
Depending what's needed to be done in your cold start, also, obviously a relationship with a realtor,
yes,
a contractor. I mean, truly the list goes on. You mentioned, I think you mentioned 7, and I'm sitting here going through
10.
Thinking through each step of the cold start process. It's definitely, there's a lot of hands involved in what's going on. But to bring it back to the core, yes, look, you need your legal, you need your accounting, your CPA, you need your bank, and ready to take on the world.
Yeah, and what you guys do at Akrinos is important, because you get to kind of coordinate all that together for the doctor and do it in a way with a great smile on your face to make it feel as non-painful, as unpainful as it could be if a doctor does it, by themselves.
Absolutely, yes.
So yeah, anyway, I thought I'd be remiss to not talk about the dream team of business professionals that need to surround the doctor in order for the doctor to have as easy as possible of a cold start process from the beginning of the process when they call your organization until the ribbon cutting ceremony. Through that whole process, those 7 or 8 of us that are business professionals, we try to make the job as easy as possible when you're cold starting your practice, doctors.
Absolutely, absolutely, and I'm glad you bring that up, Darren, because again, there's a lot of considerations that go into that, and it's a huge commitment, and
Absolutely.
yeah. So, and we've got great stuff going on. Y'all can visit the Akrinos website, learn more, what have you. But let's get back into talking about optometry business financing and this second area to leave cold start to get into now. As you refer to it, Darren, this is going to be buy-in, buy-out. So this could be any combination of bringing on a partner, perhaps bringing associate up to a partner level, a partner status. It could be a straight 100% Dr. A selling business to Dr. B and what have you. So walk us through a little bit of what the buy-in, buy-out process looks like from a banking standpoint.
Yeah. So what's funny is that when I started my career around 2011, working with optometrists, back then it seems as though between probably 2011 through 2016 or so, most optometrists that I worked with personally were doing cold starts. It seems as though now the way that I guess I know more folks in the industry now, but it seems as though more doctors are doing buy-in, buy-out, or just truthfully, or like a partial buy-in. So not a full buyout where you buy 100% of the practice out, but maybe 25% or 35% or 45% based on the amount of partners in the practice. So I've definitely seen more and more acquisitions, or again, acquisitions and buy-in, buy-out, kind of the same term. And it's exciting because it means that those doctors that I would call the more senior doctors, trailblazers in the industry, and those trailblazers are going to retire pretty soon, or will be retiring, and those trailblazers are looking to sell their practices, and get a good price for their practices, but also sell to the right individual. And also the great news is the doctors that are starting their career out, maybe they associate it with the practice for 3, 4, 5 years. Now they have the opportunity to buy into revenues right off the bat. So again, cold starting and or buying out and or buying into a practice, they're all good. It just depends on the doctor and where your heart is with that situation, doctors.
Certainly. And on that note, it starts with a practice valuation, right? A current practice valuation. And then from there, though, right, the underwriting process here can now be based off of past business production, whereas a cold start is purely based on the business plan and the projections in the business plan. When we're talking about a buy-in, buy-out, you guys can lean into the performance of the practice.
Absolutely. So most banks are going to have a loan to gross, or LTG, or another term is LTGV, or loan to gross, LTGR, loan to gross revenue, which is the loan that we can provide as banks or as a banker is based on the revenue of the practice. So Wells Fargo and most of the banks, I believe, are around 85% and up. Some are a little bit higher, but most are around 85% loan to gross. So, Eric, I'm gonna throw a question back at you. If a practice does $1 million a year in revenue, how much, based on 85% loan to gross, can the bank lend? Or should we ask the audience today to put that into the chat box? Let's see, I'm looking at the chat box here. We'll give everyone another 10 seconds. And Eric, you can just throw out the answer too if you don't know it.
So we're talking 85% loan to gross. And that's really interesting because I didn't know exactly what that number was pegged at these days. But I mean, 85% loan to gross, if it's $1 million practice, the bank will loan $850,000.
Correct. That's it.
To make this happen. Yes, absolutely.
Yeah, have there been times that banks can lend more? Absolutely. But I would say a good rule of thumb is about 85% loan to gross. Again, I've seen 90% loan to gross. I've even seen 100% loan to gross with other industries in the dental industry. I've seen 100% loan to gross. But again, around 85% loan to gross is the rule of thumb for the practice itself. If there's commercial real estate involved, that's a little different. We would have to get a valuation on the real estate as well. But if it's on just the practice, meaning the goodwill of the practice, the charts, the equipment within the practice, everything within the four walls of the practice, that's usually about 85% loan to gross. If I can say one more thing, Eric, which is really important, the banks, we are in the role of being an advocate for our doctors. So our clients, our doctors, we look at you guys as very highly valued folks and very highly valued clients. So we never want you to be in a position where you're quote unquote overpaying for a practice. So that 85% loan to gross, it's never going to be dollar for dollar what we can provide a bank loan for and what the practice valuation will be. I've seen a lot of similarities with those two, but again, it's a good rule of thumb that the banker, we sit on the doctor side of the table, trying to get the value of the practice priced correctly the first time.
That's very good to know. And something else that I think should be brought up as well, Darren, as we're talking about this, is that there are a ton of different ways to actually structure that buy-in deal, right? And the bank is not necessarily involved in that. The bank just wants to see, hey, what's the valuation? How much are you asking for? So that being said, there are other elements of this exchange, whether it's an associate becoming a partner or any sort of other business transition, but particularly as it pertains to this partnership scale, determining what type of time horizon one might be on in the transfer of ownership, right? When we look at these things over, say a 5-year time horizon, and we're doing 20% a year, or whatever the case may be, or a variety of different ways to go out doing that, that's then where you would work with an attorney to draft up articles of incorporation that are going to apply to this. We then get with the bank to secure the financing that's gonna drive this process. So that y'all is where it goes back to something that Darren mentioned earlier regarding kind of like your team that's going to be surrounding you and the importance of legal right there with banking and CPA and some of these other teams that we mentioned.
Yeah, Eric, look, the bank. If I can interject for a second, we're not privy to what happens between the consulting group, the attorney, the doctor, and the CPA. That's not the bank's business per se. We think it's important for the doctor to know up front where we are with the loan to gross number and or percentage. So you can, again, use that as a bargaining chip, I guess, with the seller of the practice, where everyone knows kind of what the banks will provide in the loan. And then if there needs to be a seller carryback note, that's something that we can talk about as well. But again, I've seen recently most of the valuations are comparable and pretty close to where the loan to gross number of my bank and other banks have been.
Awesome. Exciting stuff. So, okay. Yeah. So we've touched on cold start. We've touched on buy-in, buyout, and the next topic, which you had mentioned a moment ago, and you actually pointed out that this is definitely different from what we were talking about earlier when we're talking like loan to gross and stuff, and that's specifically commercial real estate. So please, for all those doctors that are tuning in, that this is going to be the year that they're going to go ahead and make that investment and build that office of their own, walk us through a bit of what goes into the commercial real estate side of things.
Yeah. So again, I'll speak high level, meaning I'll speak generically about the banking industry in regards to banks that work with doctors that are looking to buy commercial real estate. So I'm smiling right now because this is the first year that I've seen a significantly larger uptick in doctors reaching out to me personally for commercial real estate. So I think it has to do with the interest rates being we're in a rising interest rate environment now. There's a lot of just a lot of instability right now, and I think doctors are looking at, do I lease for another 5, 7, or 10 years, or do I just buy my real estate and have a nest egg for my family down the road? So again, I'm seeing a lot more, like a significant increase in the amount of doctors that are looking for a loan for commercial real estate. Most banks are going to have usually two types of commercial real estate loans. The first one is going to be a conventional loan. Those are usually much more difficult to qualify for, unfortunately. Usually the doctor has to be either a member of the bank, have assets with the bank, and/or has already been in business for X amount of years, depending upon the bank. The other product that banks offer, which is definitely more common with pretty much all banks, including credit unions, are SBA loans for the purchase of commercial real estate. So let me start with conventional loans first. So conventional loans usually have shorter time periods. I've seen 10-year conventional loans, 15-year. I've even seen 20-year conventional loans. With certain banks, such as Wells Fargo, we have pretty long amortization in regards to our SBA product, which can go up to 25 years fixed. So almost like getting a home mortgage if you wanted to buy commercial real estate. So just again, high level, and generally speaking, when you want to talk to your banker about commercial real estate, take about an hour. Let the banker know you have a lot of questions, and take about an hour of your time to kind of go over all the questions you have with your banker, and then they'll walk you through all the ins and outs and all the needs and requirements of buying commercial real estate. One more thing, Eric, that's important is so question that I got today: can a startup doctor buy commercial real estate? The answer is absolutely yes, you can. It is definitely more challenging for a startup doctor to buy commercial real estate, but it can happen. Banks, we want to lend. Second question that I received today was if a doctor is in private practice already and they want to buy commercial real estate, is it a good idea to shut down the current practice and only work in the new practice? The answer is yes and no. What I like to see personally is a doctor keep the current practice open while they're building out the brand new office condo or standalone building. And then if there's a transition over time where you transition out your current practice, patients, charts, equipment to the new practice, that's amazing. That's something that I would say that most bankers would like you to do. I don't think it's a good idea personally for a doctor to shut down their practice, which is, I call it the life's blood, the revenue, right? The way that you're paid while you're building out a practice. That might sound very simple and not like it might not sound like a good question and answer, but I've received that question before many times. And again, I think it's important for everyone to understand that there's no such thing as a bad question. Again, when dealing with commercial real estate, spend about an hour with your banker asking all the questions that you have so they can go through those things for your personal situation.
Excellent. Excellent. A lot of moving parts there when we bring commercial real estate into it. But I know from working with a number of doctors over the years, it's a very exciting opportunity for any practice to be transitioning into. So it's great to hear there's awesome financing solutions out there to support that. So let's see, we touched on cold start, touched on buy-in, buyout, touched on commercial real estate. And there's other topic that you mentioned it's been hot there. You've been getting a lot of calls on is just refinancing one's business financing. So share with us a bit of how that world works.
Yeah. So Eric, as we talked before we went live today, I receive a lot of calls for startups, which is amazing. Acquisitions, which is again amazing. Commercial real estate, and I will say the fourth call that I get a lot of is refinancing. So doctors that have a startup loan that they got 5 years ago. Let's say that 5 years ago the doctor had a startup loan that's at 6% interest on a 10-year note, and the prepayment penalty, which was a 5-year prepayment penalty, is now no longer active. So that doctor can reduce their current loan, which let's say they have $200,000 left on that loan. They can refinance that loan to a rate around 4% on a 7-year or 10-year note, depending upon the bank, and essentially cut their monthly payment down in half or a little bit more than half, which frees up cash flow. So the key word or idea when I think of refinancing practice debt is one of the easiest ways to free up your cash flow in order to invest in new equipment, maybe pay your staff more, invest in marketing, invest in consulting, so on and so forth. So something that I see a lot of, and it's a good idea for doctors to consult with their banker or call me if you want to, and just kind of talk about your current interest rate, how was the loan structured, which bank did you get it from, and maybe there's bankers out there that can refinance, give you a better overall term and payment, which will lower your monthly payment.
Fascinating stuff. And in this regard, it all starts with a phone call, right? I mean, this seems like a pretty simple, straightforward process, right? Because again, this is recognizing that the business is already established and operating and performing. So seems to me that this can be a pretty smooth, seamless process for applicants.
It usually is. I would say the fastest project that bankers that specialize with and working with doctors specifically is usually a refinance. That's usually pretty simple. We essentially buy the debt from the other bank and we bring it over to our bank. So that's pretty simple. Usually 30 to 45 days, the whole process can be done. Depends on the bank, of course. But yeah, refinancing is one of those things where if you're in private practice, you're doing well, you're growing your revenues, but you have a 7% loan when rates right now are closer to 4%, it might make sense just to refinance it and see all that cash flow go back into your assets. Last thing is merchant services. That's another thing that I get a lot of calls about is merchant services, which is important. I recommend that to anyone listening today. If you haven't looked at your merchant services statement, take a look at it. You might be paying too much money. There are many merchant services organizations out there. Again, I can help out if you are interested in knowing what I can do here at Wells Fargo with our merchant services team. But again, the purpose for me and Eric to talk today was about just giving solutions on overall how to grow revenue and how to reduce expenses. So merchant services is one of those things where a lot of doctors forget about it. They kind of set it and forget it, and you might be paying 8%, 7%, when there's organizations out here that can provide 2%, 3% versus 7% on your merchant services. So just wanted to throw that little tidbit in there as well, Eric.
Yes, absolutely. Well, I'm noticing here also, by the way, yes, please, if you have any questions, drop them in the chat. And so on that note, Darren, I suppose maybe now we'll transition. I know we hit on the primary topics that we were kind of looking to jump into this evening, but what can doctors kind of start doing if they're kind of like assessing their situation, and particularly from this merchant services standpoint, like what is the process for them to investigate what they currently do and then entertain whether it's going to be, whether making a change there is prudent? Walk us through a little bit more of that process.
So, Eric, great question. So I think every business owner, no matter if you're a doctor, if you're a mechanic, if you're a gas station owner, you need to have a personal relationship with a banker. I think having a banker that you can call, you have their direct cell phone number, you have their direct email address, so on and so forth, where you can just run ideas by them. So I'm a big believer and advocate for every doctor listening to us today or in the future. You need to have a banker that you know personally that you can reach out to. Again, local banker, regional guy. I work nationally. Doesn't matter if it's me or anyone else. Just have someone that you can call to ask questions, and hopefully within a day or two or faster, they can call you back with an answer. I think it's so when I switched from being a pharmaceutical sales rep, where I'm inside of medical doctors' practices every day for 7 or 8 years or so, I would sit down and I would look at the interaction with the other vendors, interacting with the front desk, the staff of the front desk, or talking to the doctor directly, the office manager. And I always felt like the salespeople that were good were the ones that built an actual relationship with people to give good, bad, or indifferent answers, but they give an answer in a timely fashion. So again, I'll stress this one more time. Having a banker that you trust, that you know, that you can call anytime, day or night, or on the weekends, to just answer those questions, even if it's simply like, hey, what's the rates right now? Or what are the terms you can do? Or I'm looking to buy a second location in a second practice. Is it a good idea? Having that free, I'm free, doesn't cost any money, or bankers as a whole, our consulting doesn't cost any money, it's free. We can provide as many answers as possible to steer you in the right direction to help you on your journey.
Excellent. Hey, so look, we did have a question come through here, and okay. And I love this question, considering that Akrinos, we work with a ton of cold starts, and the question is this: it's all about how are student loan payments accounted for in a cold start application, and then the follow-up to that is, if the doctor changes payment plans just before applying, how will that look in underwriting?
Right. So again, I'm speaking generally here. Generally speaking, the banks that have the larger, I'll say it this way: when you go to Vision Expo East or Vision Expo West or Fico or many of the other regional or larger trade shows, if you see a bank at that trade show, we usually have a division of that bank, for that bank that has specialists such as myself. So with those bigger banks, we usually don't care as much about your student loan payments. The key is they need to be managed. If they're in deferment, we can work around that, no problem. The key is usually the FICO score, because if a doctor is struggling paying their student loan payments on time, that's going to show in the FICO score. So your FICO score is 685 is kind of a general number that most of the banks are looking for. Some banks are a little bit lower, some are a little bit higher, but around, let's say 680, 685 is the number, FICO score number that the banks want to see to get you approved. We understand that you'll have $300,000 of student loan debt, but we'll still lend based on the fact that those banks, as I said earlier, that are at the big trade shows, there's about 3 or 4 of us that go to the big trade shows every year. We understand that you have debt, and we understand that you're going to manage that debt and you're going to do well and you're going to be successful. And your business plan shows that you're successful. And we understand that, and we're going to lend to you that $300,000, $400,000 or so to start your practice up. So Dr. Mindran, great question. I receive that question a lot. And again, it's a great question. I'm going to read the bottom of it. If an OD changes payment plans just before applying, how does that look in underwriting? I would say that depends on the bank. Most of the banks, again, we look at the FICO for the most part. The FICO is going to be that canary in the coal mine if you're struggling to take care of your personal payments. If you're managing your payments, if you're paying your bills on time, your student loan should not stop you from getting a loan from most of the banks that are out here.
So if I'm hearing,
that's the question.
That was a great answer. And so Darren, if I'm hearing you correctly, you can come right out of school and make a case to a bank that I'm ready to go into a cold start, and you could perhaps get a nod.
Eric, great question. So It depends on the bank. Some banks
Sure.
out here, we will lend to a doctor fresh out of Nova Southeastern, right? That's the closest optometry school in the Miami, Broward County area to me. Other banks will want the doctor to associate for at least 1 year before they can qualify for a startup loan. So back to what I said earlier, every doctor listening here should have a banker that they know, that they trust, that they can call, and just ask those questions and understand more about their underwriting policy on a one-off, one-to-one phone call or in-person meeting. So again, there are banks that will lend straight out of college or straight out of optometry school, but most banks are going to want to see the doctor have at least 1 year of association underneath their belt. I personally, if I had to give an answer, would like to see the doctor have 1 year of associating, just to make sure that being a cold startup doctor and a owner of a practice and being responsible for people and being responsible for your community is something that you want to do. And having that 1 year of working for somebody else, either commercial, either in a corporate setting at a Target, Walmart, so on and so forth, or working at a private practice, I think it's important for a doctor to have that 1 year underneath their belt.
Yeah. It's still very exciting news, though, right? It's not like you need to be out practicing for 5 or 10 years. No. I mean, you can go cut your teeth, learn a few things, and get ready to play if you want to go in that direction.
Yeah, I mean, again, when I started my journey in this career working with optometrists in 2011, a little bit more difficult back then, right? A little bit more difficult. But we still were doing loans for doctors 1 year out, I think up to $300,000 or so back then. But now, again, we can provide significantly more financing for a doctor based on their specific individual need. The key word for me and the key takeaway that I want everyone to understand about this presentation with Eric, this discussion with Eric, is you have to have a banker that you can talk to and just kind of ask the questions based on the credit policy of the bank at that moment, because credit policies, they change. Underwriting policies change. So it's important to have, again, that one-on-one connection with a banker that you trust that can help you understand how to navigate through the sometimes arduous process of underwriting.
The arduous process of underwriting.
Sometimes.
Sometimes.
And by the way, so those bankers that are in my role, in the development role, or those of us that are loan officers, we're not underwriters. So our job is to try our hardest to get the doctor whatever they ask for. So we are in the role that's kind of a tough role because we have to, work for our bank and abide by our bank's rules and policies. But we're also looking and we're advocating for you as an optometrist. So it's important that the optometrists on here understand that those in my role, in development roles and business sales roles, I guess, within banks, we're trying our hardest to get you approved for loans and to get you exactly what you asked for.
Awesome. Excellent. Well, Darren, I have not noticed any other questions come through the chat. So I suppose as we start to maybe wind things down here, okay. If in the context of this conversation you had any other thoughts or just kind of advice for those viewers who see perhaps a big financial event on the horizon, the likes of which they will need financing. I mean, any just kind of closing thoughts or advice to send viewers off with?
Whew, man, that's a good. We need to have another discussion in probably a couple of months because
sure,
there's a lot of things happening right now, and they're all good things in the optometric space from the bank's perspective, right? From the perspective of us wanting to earn the business of the doctors that are listening to me today. I think, again, cold startups, we love the banks, my bank specifically, we love helping doctors start their dream practice, help their communities see better for the most part, and also diagnose disease within their communities. We love doctors that are buying into these huge, $3 million a year revenue producing practices, and some practices are greater than that. We love seeing doctors that are buying out practices 100%. Maybe the seller will stay on board for 6 months to a year. And, again, I'm here to give advice on how that looks and how both parties benefit from that. Thirdly, commercial real estate. Everyone, it's hot. No matter if you're in a small town, a bigger small town, or the biggest city in America, doctors are buying commercial real estate. Doctors are getting approved for commercial real estate. Not just my bank, but most of the banks that are out there. So now is probably the best time, and at least in my 10 years of doing this, or 11 years doing this every single day, for doctors to look into buying commercial real estate. We talked about refinancing. So being able to immediately, within 30 to 45 days, lower your monthly payments and have cash flow that you can invest back into the business, invest into marketing, consulting. Everyone call Eric, obviously. Eric's the best. I love that smile, Eric. So I will say number 5 is, again, having a dream team around you that you trust, of advocates that work really hard every single day to ensure that you as a doctor, you have everything that you're looking for, and just people that know what they're doing every single day and can help you to get you along through your get your vision to become a reality. That's really all I got. Those doctors that I've worked with in the past and we're working with currently, this is my first live chat. So the first time I've ever done this before. So I want to say to everyone personally, thank you for allowing me to be your banker and work with you. And I look forward to working with more doctors in the future. That's all I got for the most part, Garrett. Thank you for being a great moderator for my first live chat here.
It's great, Darren. And again, man, thank you so much for joining us. You really are a wealth of information. And I know as we've discussed this perhaps is kicking off something that might be an ongoing engagement where I'm thinking we can maybe drill deeper dive into these individual areas. So for everyone that joined us and has viewed, find value in what we're bringing, definitely follow us. Look, subscribe to the Akrinos YouTube channel. Follow us on all the socials. Darren, how can folks get in touch with you? I know you're in socials, LinkedIn, the whole world.
Yeah, so it's been doing this for 11 years. So social media is, I'm on it, but it's one of those things where usually for my job at Wells Fargo, I can be reached via my cell phone number and via my email address. So I would say we can leave that information after. I guess I have flyers out there, so we can leave that information on the flyer.
Absolutely.
So that's usually the easiest way to reach me in regards to doctors that have questions about their specific financing needs for anything they're doing within their practice currently or their future practice.
Excellent. Well, Darren, it's a pleasure. To everyone that's joined us, on behalf of our whole team at Akrinos and Akrinos Access, Eric Matei signing off, and everyone have a spectacular week. Get out there and make it happen.
people say no. We want to say yes, but it's more to it than just my friend said.